What is going on, guys, and welcome back to another very exciting video. In this video we are going to be talking about Google, and this is a company that I haven't talked about a whole lot this year, and that is mainly because the stock has just gone up. Google has had a very good year so far this year, and I was building out a position in this company around this time last year, and that was the perfect time to be adding shares of Google. So what I want to do in this video is I want to go over some news on what has gone on with Google over the last 6 to 8 months. I also want to go over their latest earnings announcement, and I want to end off the video by going over a potential price target for 2024. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Google's chart. We can see over the last month that they are up just under 6%. If we look at the last 6 months, they are up 42.5%. Year to date, up 52%. If we look at the last year, we can see that the stock a year ago was just breaking under that $100 mark, and then it fell all the way to a low of around $83. From there, the stock has recovered very nicely and is up over 63% to where it is sitting at now of $135. If we look at the last 5 years, we can see that Google is up 130%. It did have this small dip back in 2020 where the stock fell from $75 all the way down to $50, but it recovered very well over 2020 and 2021 to an all-time high of around $150. However, with interest rates rising last year, the stock suffered along with the rest of the market and fell all the way down to that point that we mentioned before of $83. And we're starting to see it recover back up, but it still hasn't hit these all-time highs yet of around $150. If you had to use 2 words to describe 2023 in the stock market, it would be artificial intelligence. We have seen stocks like Meta, Nvidia, and Google all benefit vastly from artificial intelligence and the hype around this term. In Nvidia's most recent earnings release, they announced a partnership with Google that could expand the distribution of their artificial intelligence technology. This is not only massive for Nvidia because of the amount of sales that they are gaining from this, it is also big for any company partnering with Nvidia right now because it speaks to the amount of growth expected in the artificial intelligence industry. And we are seeing this technology already being converted into top-line numbers. Google has priced its AI-powered Duet AI in Workspace at $30 per month, and that is the same price that Microsoft is charging for their Microsoft 365 Copilot AI technology. It will be interesting to see over these next few quarters how this AI technology will actually impact Microsoft and Google's top-line numbers. Their revenue, I would expect to slowly increase. However, over the next couple of years, I think this will have a much larger impact, especially if we start to see interest rates fall, as more companies will be more open to this type of technology. In terms of Google's most recent earnings announcement, they reported their earnings back on July 25th, and we could see that they beat on both top and bottom line numbers. For EPS, they came in with $1.44 reported versus $1.34 expected. That was a 7% beat. If we look at revenue, they reported $74.6 billion versus expected of $72.7 billion. That was a 2.5% beat. If we open up their second quarter 2023 results, we can see that they came in with that $74.6 billion in revenue. If we compare that to 2022, they came in at $69.7 billion. Last year, they were experiencing around 13% growth year over year. This year, that number is down to around 7% growth year over year. So they are experiencing a little bit of slowing growth in terms of their top line numbers. This graph on macro trends shows that a little bit more clear. We can see that last quarter of $74.6 billion in revenue. If we look at the trailing 12-month revenue, it's sitting at $289.5 billion. And down here, we can actually see those growth numbers year over year. So around a year ago, they were experiencing 12.6% growth in terms of revenue. That dropped down to 6%, then 1%, and it's starting to recover back up 2.5%, and then where we're sitting at around 7%. So I believe if we start seeing interest rates drop, we could actually see this revenue growth get back up into higher, maybe double-digit growth. And that is what Google was experiencing back in 2020. And before that, anywhere from around 13 to 20% growth in terms of their top line numbers. It is important to keep in mind that a lot of companies over the pandemic experienced a lot of growth being pulled forward, and Google is no exception to that. We can see that in June of 2021, they experienced 61.5% growth for their revenue year over year. One of the ways Google can get back to top line growth is through their cloud business. We could see that Google Cloud in 2022 was bringing in around $6.3 billion. That is now up to around $8 billion in 2023, around a 30% growth year over year. This is also the second consecutive quarter of positive net income for Google Cloud. We can see at the same time in 2022, they were losing around $590 million for the quarter. However, this quarter they brought in $395 million in positive income. So not only will Google Cloud potentially have a big impact on top line numbers, it could also help their bottom line numbers as well. And we see that a little bit reflected in this quarter's EPS numbers. We can see that in 2022, they were bringing in $1.21 in EPS. In 2023, that number has grown by almost 20% to $1.44. And we can see Google's EPS numbers shown graphically here over the last 5 years. Again, a lot of growth was pulled forward in 2021. We could see a couple of quarters where their year-over-year growth was almost 170% for EPS. Right now, they've gone through a little bit of a dip. We could see that a couple quarters ago, their EPS numbers were falling by over 25%. However, we are starting to see a little bit more growth year over year, and that is overall a positive thing. I think the AI business and their cloud business could have a big impact on getting this back to all-time high EPS numbers of anywhere from $5.50 to maybe even $6. And the analysts have strong projections over the next year or so. We can see that for the current year, they have an average EPS estimate of $5.64, a low estimate of $4.85, and a high estimate of $6.40. If we look out to next year, 2024, we can see that the average estimate jumps all the way up to $6.66. We have a low estimate of $5.52 and a high estimate of $7.45. In my opinion, for Google to hit some of these growth numbers, we need to start seeing the Fed dropping interest rates. Here we are seeing for average estimates over $1 of growth in EPS numbers, especially if we look at the $7.45 mark. I think what we would need to see is interest rates come down in a major way to really allow Google to reinvest back into their business, especially their cloud and AI businesses. If we look at Google's valuation right now, they're sitting at a forward P ratio of 20.28. Obviously, this is not as great as a year ago when they were sitting at around a 15.85 forward P ratio, but even for a company like Google with the amount of growth they have ahead of them, I don't think a 20.28 is anything ridiculous, especially when you consider the fact that Apple is currently sitting at a forward P ratio of 28.49 and Microsoft is sitting at a forward P ratio of 29.59. So here we have Google for 2023 and 2024 at the current price of $135.66. We have their earnings, the average estimate, the low and the high, and their corresponding PE ratios. But what's interesting to me is when we look at the 2024 numbers, because right now the average estimate is $6.66, which is equivalent to a 20.37 forward P ratio. The low estimate is $5.52, which is equivalent to a 24.58 forward P ratio, and the high estimate of $7.45 equals an 18.21 forward P ratio. What we can do is we can use the current price and the current forward P ratio for 2024 numbers, and with the average PE ratio right now of 20.37, and in my opinion, a potential PE ratio for Google would be anywhere from a 25 to a 30, especially if we start seeing interest rates drop, then generally valuations go up. So if we see that environment, we get a potential price target of anywhere from $166.50 to $199.80, which would be anywhere from a 23% to a 47% return based off the current stock price. If we use the low EPS numbers, we get a current forward P ratio of 24.58. Again, if we assume valuations being anywhere from 25 to 30, we would see a price between $138 and $165, which would be anywhere from a 1.7% return all the way up to a 22% return. And for the high EPS estimate, we have a current forward P ratio of 18.21. Again, using a 25 to 30, we would get a price target anywhere from $186.25 to $223.50, which would be anywhere from a 37% return all the way up to a 64% return. Right now, I am not buying any more Google shares. I have built out a very solid position, and I was really happy with the time periods where I've built out the position. I originally started buying Google shares back in 2020, and I'm happy with when I bought. I added to my position when it dropped below 100, and overall, this is a great company to be in, and I think they have a lot of long-term growth. The thing is, they have a 90% market share of search engines, and that is absolutely massive for advertising. However, when advertising is hurt, companies like Google and Meta really suffer. And I think we're starting to see over the next year them really starting to get back to growth, especially if we see interest rates drop and the Fed really coming in with a softer position around interest rates. I think that will have a big impact not only on Google, their top and bottom line numbers, but also the valuation of the company. But keep in mind, do not buy a company just because some random guy on YouTube talks about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.